for 2024 to make it a killer year. So thank you all for taking your time this Tuesday to join us. And then I'm going to let Gina and Jordan introduce themselves. The other thing is we are going to mute you, but you will be able to unmute yourself. So if you have questions for Pete, throughout, you'll be able to unmute and ask questions. There's a chat box too, so you guys can put questions there as well. And we'll be monitoring that. And then we'll follow up, afterwards to make sure you guys don't have any other questions you aren't able to get addressed here. All right. So thanks again. And Jordan and Gina, you guys take it away.
Yeah, thank you. Thank you all so much for coming. Pete Fickeisen is an incredible asset here at CrossCountry Mortgage. This is the only loan products that have been increasing compared to last year. So we have been doing quite a few of them. He's an incredible resource. And when we met with him, we said we have to share this with realtors because you guys are on the front lines of when you hear certain situations, we want you to say, oh, we know we can help them. So here we go. And Jordan, if you just want to say hi, and we'll let Pete take over.
Yeah, I'll just say hi. Thanks for joining the call. Hope you guys find this useful. And if you guys have any questions, let us know. We look forward to great 2024 ahead and happy holidays.
All right, Pete, you take it away.
What's happening, everybody? So we're going to start this PowerPoint here in a little bit. So the most important thing is I want you to just, if you're watching us, you're going to hear my voice a bunch during this. I'm going to turn off, my camera because I get a little animated when I talk. But I think the most important thing is that this is all about you and opportunities that you've seen. And, when it comes to, this group that you're working with here at CrossCountry, we want you to think of all these products as almost like our portfolio products. We make the decision here on all these products we're going to talk about today. So while we've had a couple banks disappear, actually, I think we're more than a couple now, right, Gina?
Yes.
We've had some people disappear off the roadmap. Our kind of go-to local banks as a real estate agent to say, hey, listen, I can go here. I know I can get this done. It's kind of disappeared, and it's all because of deposits, right? The people have, or banks have really pulled back on what they're going to do, even for people with a lot of deposits in a bank. So we want you to think of us as your first stop and or last stop if you have a problem. I like to say that we don't cry over spilled milk. We're here to help you. And I think, in this timeline where, you might not have a ton of inventory in your marketplace and, you're bringing all these buyers around, we don't want you to lose any momentum with these clients. And I think a lot of you are going to sit there and go, wow, I have a lot of people I can fit into these niche products. So you can put your questions in the queue. I'm going to stop like halfway through. We'll answer some questions. And at the end, we'll go through some things as well. But this will be recorded. We can send it out to you as well. So let me share my screen here. Yeah, Gina, can you see that?
Yes, we can see it.
Okay, so there we go. And I'm going to stop my video. All right, perfect. So here we go. So this is our real estate partner class here at CrossCountry Mortgage. Today we're going to be talking about, products that are a little different from the norm, things that don't always fit, the box at every single lender. So when a lender tells you, hey, listen, it's going to be a no-go, we want you to think CrossCountry, right? I want you to think about, really not turning down any deal. Now, are there some deals we're not going to do? Of course. But between Jolene, Gina, and Jordan, we're here to help you and to, make as many deals happen as we can. Okay. So I've been in the business for about, 20 plus years. I was an originator at a very high level here in the Northeast. We started these products with CrossCountry about 5 years ago, and then I came on full-time about a year ago. So, our team here is all about getting business done for you, okay? I think the most important thing that you do know is that while some of our competitors offer these products, they're not doing them in-house like we are, okay? So, and, the reality is when we're talking about these products and you're thinking about people that might have offered them to you, it's really important to know when you broker a loan, when a lender brokers a loan, it's almost taking a coin and flipping it in the air with these products, right? So we've basically taken all the different brokers' guidelines and melded them into our own products where we actually service these at the end of the day. One important thing to note that I don't know if these three brought up to you, but 1 in 44 mortgages here in the United States are cross-country. So, we're helping more realtors than any other lender right now, okay? So we're one of the top 5 retail lenders in the country, meaning that I think we're actually top 3 now. And the people that are ahead of us, one of them is UWM that services brokers, and the other one is Rocket Mortgage, which is basically a call center. So I want you to know that CrossCountry is not going anywhere. Our motto is we're just going to leave no loan behind. We're going to go, the distance to try to get these done. And we have all these types of projects, including some small commercial coming out very soon. So anyways, so what is non-QM? So non-QM are non-traditional mortgage products that don't fit the regular need for jumbo, as you're going to see, Fannie, Freddie, local banks, local portfolios. But who are we helping out? We're helping out the self-employed. We're helping out people that don't have jobs but have nice assets. We're helping real estate investors. And I really want you to think a lot about this, especially for those of you in certain areas where maybe you haven't thought about trying to sell to investors. People that might be focusing on, hey, listen, we've made all this money since COVID in our stock portfolio, and I'm sitting there liquid. Maybe I should think about doing a couple Airbnbs or short-term rentals, right? Deal fallout from other banks, like basically people that can't get stuff done. Maybe it's out of the box. Maybe your client just moved here from Europe and took a job and doesn't have a FICO score or a W-2 or tax returns. Maybe you've got, someone that has an ITIN number or is part of the DACA agreement. Maybe you have a foreign national client, right? I mean, you guys are in a hotbed where you are of people coming into various areas to travel into DC, et cetera, looking for ways to invest, foreign national clients. I mean, we can basically service it all, but you don't know what you don't know, right? And that's why we're here today to say that if somebody else says no, we might be able to do it. So non-QM, really, we were brokering this product like everybody else until about 2021 when we started doing this on our own. In 2022, CrossCountry made a tremendous investment and brought basically my whole team on board here to basically devise and come up with a plan so we can do these on our own. So we don't have to depend on anybody but ourselves. We're the #1 retail non-QM mortgage company in America, meaning we do more of these types of loans than anybody else. I'd say our biggest asset here is that #1, we give you the power, and I empower your loan officers by making the decisions here. And part of our decision making is make sense, right? Non-QM loans, it's about the total picture. So 35% of everything we fund here, right, is actually on exception. It doesn't meet the guideline. So we've figured out a way to make it happen even though it doesn't meet the guideline. So if it makes sense and we're being told the truth and it's a story that we like, or if it's a value we like or a property we like, most likely we're going to try to find a way to do it, okay? So as Gina mentioned, this is probably the only growth category that you're going to see across real estate and mortgage in the last 12 months, where this has grown almost 400%. Last month, we did almost 200 million in this product. And just to give you an idea, that's almost more than what we did in jumbo. And CrossCountry's got a lot of loan officers here. So it's really a product line that you are going to have some basic knowledge of today, that so when this comes across, you know who to call. So the options that we talk about, right, are going to be flexible options with bank statements for self-employed borrowers. flexible options for people that have a lot of assets, investor-based loans without any income verification. We're deriving the income we're going to talk about today off the actual rent versus the debt on the property. So almost like a commercial feel. Our full doc line where, for instance, we go to 55% debt to income ratio on jumbo loans when most lenders go to 43%. So we get a huge pull there, and then alternative ways we qualify properties, and we use documentation to help your borrowers qualify. 1099 loans and then foreign national loans. But listen, a couple of the things here. LLCs, we can close any one of these loan products in an LLC, trust, or corporation, right? So we can do that all the time here, which is really, really important. Sorry that my Teams pops up. So let's, credit life events, things that, happen, right? So again, we're going to go through all these different products here. So first product we're going to talk about is our asset qualifier program. This is what we like to call the financial planner goal. And we're going to bring up these different referral partners because what we want to let you know is, and I'm going to stress this at the end, is once you become a marketing partner with us, which is basically through our marketing system called Total Expert, we get your headshot, we get your logo, we get basic information, we can actually pull your MLS numbers in, your real estate numbers in, etc. What we can do from there is not only can we do all the things everyone else does, like beauty sheets for listings and stuff like that, but we can also give you flyers that, so if you have a partner like a financial planner that you go to or people that refer you business, you can send them this information that will be dual branded with one of the loan officers here, and yourself, right? So we're going to talk about how you can actually get more business by finding these partners as well, okay? So if you belong to a BNI or you have some other organization that you share business with, these are great ways for you to get more business. So you're going to see a little highlights part here on the right side. We don't go to 90% with the 620 FICO, okay? We don't go to 90% with a $3 million loan amount. These are just kind of highlights of things that we do with minimums and maximums, okay? So basically what this program is, folks, it's really simple. These are people that have a lot of money, either cash, meaning checking, savings, paper bonds, marketable securities like investment accounts, right? Retirement accounts, IRAs, 401ks, pensions, trust accounts, people that have a family trust and their names on it, cryptocurrency, right? So using Coinbase or another, type of a crypto holder, we'll look at that and we're going to take those assets and we're going to derive income from it. And the baseline computation that we're going to do is really simple, okay? So for our normal run-of-the-mill borrowers, this is a no ratio program, meaning we don't use any debt to qualify them. What we're using the assets, and what we're focusing on is real estate owned, right? So this program's basis is if I have 125% of my client's mortgage debt in the bank post-closing of the deal we're doing, we're good to go. So I'm going to give you an example. I was marketing financial planners like crazy this program, right? And the financial planner called me one day and said, Pete, I think I have something for you. I said, great. And he goes, I've got a client that moved from Boston, Massachusetts out to Lake Tahoe 30 years ago. He's been working for PayPal. And guess what? He just retired at the age of 48. I said, wow, that's awesome. And he said, yeah, it's great. He's got about $4 million with me. And I said, all right. And he goes, here's the issue. He doesn't like to be in Lake Tahoe in the summer. He wants to be in Newport, Rhode Island. So he just called me and asked me to withdraw $1 million to buy this, summer home that he's going to live in half the year. And I said, all right. He goes, I really don't want, as a financial planner, a borrower to liquidate 25% of their total retirement early. So I said, all right, well, let's talk about this. How much would you recommend the client do? Well, let's do 50%. So that's a $500,000 mortgage in Newport. And then let's talk about, what does he have in Lake Tahoe? Oh, he owns a home in Lake Tahoe, and he owes about $500,000 there. So I've got a total of $1 million of mortgage debt that I'm going to be looking at by the time we close in Newport. He said, yeah. All right. So we look at his assets. He's got $4 million. All of it's in retirement. All of it's invested, right? Huge tax hit if he were to take a bunch of this money out. So what we did was we said, all right, we're going to withdraw the 500,000. So we're now down to 3.5. Okay. I'm going to use 70% of that security because I can't use all of it because it's retirement. So 70% of 3.5 is the money that we're going to be able to use to qualify the borrower. They've got $1 million of total mortgage debt by the time we close. So I need 125% in the bank post-closing. So 125% would be $1 million times 125%. So that's $1,250,000 in the bank post-close. 70% of 3.5 is much more than that. So we are good to go. Financial planner sent over 6 months of bank statements to prove that he didn't deposit that money recently. We're done. I needed an ID. I needed a contract on the house, him sign the loan documents. We closed in 2 weeks. The client made a cash offer by using the financial planner's printout of showing the $4 million. So we helped the buyer by doing that. We told the buyer we could close in 2 weeks, did a fast appraisal. We're done. Super simple. Okay.
Yeah, Pete, I have the exact same situation, except these clients are retired, moving into the town of Vienna to be closer to their kids. Exact same situation. It is a lot of documentation for them to do the traditional model of all the Social Security income, distribution income. They're really stressed. I said, just give me your assets. We'll take it from there. And they're going to pay the loan off once they move, right?
Yep.
So they own free and clear in Illinois, and they're moving here. So it's a great solution for them. They won the deal yesterday, beating out 3 other offers.
Yeah. So, our goal with these products is to not only help you with, making the recommendation to still make a cash offer and give the buyer that confidence that we can still close, but also, one great thing that we have here, and I'm sure Gina utilized it, is we can do what's called a fast track on these types of loans, and we can get a quick underwriting approval. That's so the clients feel like they're infused with confidence to make a cash offer because they don't want to put their deposit at risk, right? So marketing this to financial planners, CPAs, people with high net values, okay? We're going to talk about this program again when we talk about foreign nationals, but there's no W-2s, no tax returns, no 1099s. We don't put any income in the file. We don't even put a job in the file. We don't need any of that history. So it's very document friendly, but you definitely want to market this to anyone that is, that fits this category, right? We as loan officers are already doing that, but think about it. No job, no income, but a ton of assets. We win a lot of deals when people are looking to pay cash, right? And then also, for those of you looking at these programs, when someone thinks they need to pay cash, right? We've had multiple circumstances where people said, you know what, I do want to take a mortgage. We can refinance these mortgage just like anyone else can, right? So we also have a second method. We'll do 100% of the loan amount plus 36 months of reserves of all their debt that reports on their credit report, excluding the mortgages. So, that's another way we can do it. But the number one way we do it is with that 125% of total mortgage debt in the bank. So again, when other people are being turned down because they don't have a current job, or they're in a transition of a job, or they're taking time off, but they have assets, right? We have a lot of people that get declined and people aren't even looking at the trust, right? I'm on a trust with my family. I've taken some distributions. As long as we see some of those distributions have happened and someone has legal access to that money, we can use that money to help them qualify. Recently sold businesses or properties, right? If someone's owned that asset for 6 months or more, we will use it. So we've used, my people are retired. They're selling their property for $2 million. They're getting all that cash, and then they're buying $1 million condo, or and they're putting, 600 grand down, but they don't want to liquidate because this is everything they have, right? We can use the proceeds of those sold properties, okay? But like, think about retirement areas. Like for me up here in Massachusetts, like Nantucket, Cape Cod, wealthy towns, second home areas, vacation areas. We do a ton of these in Florida. We do a ton on the coast, okay? So great product for you guys to utilize. The next product we're going to talk about is one that you're going to hear a lot of because it's the #1 program in the US. It's the bank statement program. Financial planners and CPAs love this because who does a borrower call when they say, my lender just said I can't do something because I'm self-employed, right? As realtors, you guys are probably all 1099 or self-employed, right? So what we look to do here is, again, no tax returns, no 1099s, W-2s, pay stubs, nothing. We don't have any of those things in this file. What we're looking at is we're taking a 12 or 24 month average of bank statement deposits, okay? I don't care where the money goes at the end of the day. I'm just looking at what goes into their business account, right? So, and then we've got 3 different ways that we qualify, right? So we use a bank statement worksheet, and we basically look at, I'd say the most popular one is 12 months. So someone might not qualify. We can do, by the way, borrowers that have been self-employed for 12 months at a minimum on exception. We have 18 months as kind of, another exception that is in guideline. So if someone's been self-employed for 18 months, we'll do it too. 24 months is the standard though, okay? So what we're looking to do is we're going to take those 12 months of bank statements and we're going to break it down and say, all right, this person's, let's say, restaurant makes $1,000 a day, right? So we're going to take $1,000 a day and we're going to pop that in and say, okay, 30 days average. So I should see about $30,000 a month. And we're going to go through and ask your client a lot of different questions, like, do they have a CPA? Do they, do they transfer any large deposits from any of their personal accounts into their business account, right? We're looking for things that would be kind of disqualified deposits, right? Which are things like, I don't want to see transfers from someone's personal checking and savings or another business account into the business account we're looking at. But what we're doing is we're taking those deposits. We're not sourcing them either, folks. So if someone uses cash, right, we are not, really, like if someone, like we had someone the other day with a convenience store, they deposit cash every single day. We know that it's a convenience store, right? What else are we looking for? Well, we're looking for maybe their credit card reader is depositing money in there every day too. We're looking for that. But we're taking those total deposits, and then method 1 would be we divide the total deposits over 12 months divided by their ownership stake. So say they're 100% owner, we're good to go. Method 1 is we give it a 50% haircut. So if they deposited $1 million over 12 months, I qualify them on 500,000 divided by 12, and I'd stick that right in our system and we're off and going, right? So this is an incredible way for us to help self-employed borrowers where, let's face it, we know people write stuff off, especially in people in business for the first 2 years. What we want to see though, like if we went with 12 months self-employment, I'd want to see that they were in that same line of work before that, where they have some sort of experience in what they're doing, right? Maybe they were a business owner before in another business, right? But maybe it was still sales, okay? So it's got to make sense, but this is a great alternative way for people to qualify. So again, when people are turned down at banks, I'm going to tell you, having been a loan officer for 22 years, CrossCountry, we have the fastest way to determine self-employment. So when a lender or a loan officer is taking multiple days to get back to you on, hey, listen, we're trying to go to very complicated tax returns, folks, we have an automated system where the loan officers on this call can actually, once they're in our system, they can upload them to a third-party system that actually does the calculation and within minutes they have that back. So we will have the answer right away. And if it doesn't work, then we can go to this bank statement program. So really important to know that it doesn't take weeks to figure out someone's self-employment. It should be hours or within the day. All right. But again, we're using all these different programs to qualify. We can close on the name of an LLC, right? If someone is, we can use business assets as well for this program, which is important to know. As long as the owner of the business is more than a 50% owner, okay? And it doesn't affect, the day-to-day business of the company. I have so many financial planners say, oh, my borrower and tax preparer is sending us, oh, our borrower, this client's getting turned down here. Can you take a look at it? 9 times out of 10, we go with the bank statement program, okay? So really important to know that when someone's self-employed and they're having trouble qualifying, here at CrossCountry, we can get this done quick. So again, your key sources, if you guys belong to a chamber of commerce, you want to market this. If you're in a BNI, you want to get super local with it, right? If you're in a young professionals group, local self-employed group, Freemason, any sort of self-employed borrowers that you can find out there, let them know that you've got an outlet to help them buy a home in 2024, okay? And again, simply put, you got clients that are getting turned down, send them to this team. We're going to get a quick look at them and be able to decide what we can do very quickly, okay? Our team here also has a bank statement analyzer team that will go through and do the calculation for these 3 loan officers, okay? So it's not like this group's going to sit here and have to get knee deep into it. We do that for them, all right? All right, so our last part of kind of like self-employed here, or people that need to qualify with money, is our 1099 program. So as a real estate agent, you're probably, pretty familiar with this, but this would go for any 1099 employee. Simply put, we're going to use 1 or 2 years of 1099. So you could take your 2022 1099. We'll take 90% of it. We're going to check your year to date and ask you to verify that just to make sure you're within about 25% of what you did the year before. But we're going to go up to 90%. By the way, folks, when we go to 90% on these programs, there's no PMI, okay? There's no PMI at all. So it's just straight payment. But yeah, we're going to use 90% of your last year's 1099 to qualify to buy a home or refinance a home. Or what we're seeing a lot of are people taking cash out of homes, okay? Either to buy other properties, to, reduce credit card debt. Let's just say these rates are a little bit higher than your Fannie Freddie, probably in your high 7s to, let's say mid 8s, depending on your FICO and loan to value. FICO is your credit score. But literally, one of the things we've been talking to a lot of independent contractors on is, if you got to consolidate debt, those credit card interest rates aren't getting lower, okay? It's one of the biggest issues that we have here in America, is that people are, not taking a look at other options, that what they could do to refinance their current debt. So we can do rate and term refis or cash out refis here to get people cash. And the rates are commensurate or lower than a home equity line. So remember, folks, with all these products, we're not qualifying normally, right? So a 1099 program, if you've been trying to get an equity line and you can't qualify, we could probably do it with a lower rate this way, okay? Minimum loan amount, by the way, has been dropped to 100K, and we do go to 75K on exception, okay? So the key points, again, you guys as real estate agents, you hear someone in the office saying that they can't get a loan done, send it to the team. A lot of tech workers, a lot of independent contractors, like software engineers, gig employees like Uber, musicians, artists, people with just the side. And by the way, say you are a realtor and that's your full-time job, and let's say you made 100,000 last year. If you had a side gig as like a marketing coordinator or something else where you made less money, but your W-2, we'll use that other income to help you qualify as well. Okay. As long as the W-2 earnings or part-time earnings are the side gig and you don't make more money doing that than the 1099. Okay. But we can really find a lot of people out there to help them consolidate debt or help them dig in to buy a home for sure. So before we get to the DSCR, did we let me just see here in the chat.
There was one question, Pete.
Okay.
The question was, would structured settlements count as an asset you would consider? This is for the asset qualification loan.
So a structured settlement meaning like a settlement that's ordered by the court.
Lance, can you expand?
Yeah, I mean,
Yes,
structured settlements come in any, shape or form. The most recognizable structured settlement is a lottery winning, but something that's by the court or something like that. Quite frequently, settlements in cases or insurance or whatnot are not lump sum, or people decide to take it over time, but still has a, intrinsic value to it.
Yeah, so Lance, we actually had a scenario the other day where someone had sold a company and they were getting, so this was less, so we need 3 years of continuance to qualify on the normal side, right? So if someone won a lottery and they had 30 years continuance, we could do that normal. We probably didn't have to go this way. But a lot of the time, I have loan officers coming to me with structured settlements that there's not a continuance of 3 years, but it makes sense, right?
Mm-hmm.
And what we look to do is we just look to save, like in this case, this client was getting $500K a year, just got their distribution, but their continuance was that they're getting one more in 2024, one more in 2025. There was also non-continuance of divorce and alimony income. So what we were able to do is we were able to determine like the make sense underwriting of it was, does this client actually save some of this money, or do they just, get the 500,000 and spend it like crazy? And we were able to determine that we felt comfortable for, going forward with just the 2-year continuance. We divided it by 3 years and they still qualified, right? So we kind of went with a little conservative route with that. And then we did look at the fact that the borrower was, saving and just distributing a certain amount of that money each month to themselves. So, I felt great about that deal. So, but yeah, structured settlements, we definitely do, especially, we're going to get into it in our full doc conversation, especially with divorce. Like if you're not working with the divorce attorney or multiple as a real estate agent, not only is it an incredible way for you to find, listings, but also to gain more buyers, right? We do a lot of alternative solutions there, based on what's happening with the settlement. Okay.
Thank you.
All right. So I'm going to move right on.
Pete, there's one other question.
Okay.
It said for bank statement method includes no PMI, and can it be used for investment properties?
Yes and yes, 100%. So now we're going to talk about the investment property, right? So, everybody's playing in the same pond, right? Everybody's fishing for the same fish. I want listings and I want buyers, right? The problem is that on the mortgage side during COVID, I'm sure Gina, Jolene, and the rest of our crew here, we were probably the only ones that were working close to 20-hour days during that time, doing as many refis as we can, giving all of our legacy clients that you've shown us and given to us the best possible interest rates, out there. So are people like super anxious to go put their house on the market when they've got a rate in the 2s or 3s? Probably not, right? But I think one of the biggest things that we can look at is in your areas, right, where you guys are located, there's investors everywhere. and there's properties, okay, where people own them free and clear, where like maybe they want to go out and buy more investment properties, or maybe they want to get into short-term rentals, right? Maybe they want to get into the Airbnb game, right? So the investor loan that we have is called DSCR. It's called investment cash flow, but DSCR is debt service coverage ratio. So the most important thing for you as a realtor to understand here is the determination of rents, okay? As your job, you need to figure out what the income is, right, on a property for an investor. And then as your job, you also need to figure out the values of the property, right? So here, what we're hunting for our investors are, we're hunting for properties that will drive income. So that DSCR level, just so you know, can be as low as 0.75%, meaning that my rent, let's say, is $750. Yes, my rent is $750 and my payment is $1,000. That would be a below 1.75 DSCR level. That's the lowest we go to per guideline. Have we gone lower on exception? Yes. A 1-to-1 ratio or a 1 DSCR would be my rent and my payment for the home are equal. And above would be my rent is, let's say, $1,250 and my payment's $1,000. That would be a 1.25 DSCR. So the higher the DSCR, the better, right? That's what we look at here. As a general guide for DSCR loans and what investors look at, a lot of websites, everybody wants to write this down or listen to this again, biggerpockets.com. There are local meetups that you as a real estate agent and loan officers can combine together and go and give a DSCR presentation on how you go and you search for properties for investors and what your methods are. People want to hear this, okay? There was that little meme boom during COVID where everybody signed up, specifically young investors from the ages of 25 up to, let's say, 45, which, by the way, in our last month's CrossCountry monthly meetup, we were told that that demographic of 25 to 45 has been the hottest pocket of buyers and sellers in 2023 and is projected to be the same thing according to NAR for 2024, right? So we're really targeting that group, right? We're targeting that group that said, hey, I'm going to get a Robinhood account and I'm going to invest in, AMC, or I'm going to invest in whatever the video game, company, and I'm going to take a risk. I'm just going to day trade because I have nothing else to do because it's COVID and I'm sitting in my house. So many people made a ton of money off that, and they're sitting in cash positions, we're finding all over the place. So what you want to do is, what we're seeing at these meetups is that we have so many young investors that don't know what to do, but they've got a base income of anywhere from, let's say, 75 to 200 grand that's W-2, and they have rent. So they can't afford doing an investor-based loan based on qualifying them off their regular income and any potential income. So that's where we turn to DSCR. So this is another no ratio product, meaning there's no income in the file, no personal income, no personal job, none of it. We don't need W-2s, 1099s, K-1s, tax returns, anything. Everything is based off of, let's talk about a purchase. I'm going to go buy a 3-family in Boston, Massachusetts. Each floor is currently being rented for $3,000. I am taking over those leases, so I've got $9,000 in total rent. So I have to make sure my payment, okay, that I'm going to be at least 75% of my payment. I'm going to qualify off the market rent and the current leases, whichever is lower, okay? Now, where I currently have leases, the real estate agent's job is to make sure, if you're the buyer's agent, to make sure that listing agent knows to hand the leases and the contract over to the appraiser. If not, we need to make sure that they get that info. Really, really important, okay? If not, you as a real estate agent and us as a loan officer, we're just letting the appraiser come up with it whatever they want, and that usually doesn't work out great. And then we have to send in a reconsideration form, and it's time, right? You as real estate agents, by the way, there are no rules on you giving information to an appraiser. Whatever lender's telling you that is inaccurate. You can give an appraiser any information that you deem is correct and accurate. Now, as a loan officer, we have to go through our appraisal contact and or appraisal management company to be able to do that. So the loan officers are going to lead you guys to lead the horse to water here on these, but really you want to be involved. If you have information, get it to that appraiser, okay? And that goes for rents that are there, rent comps, or I'm going to get into it in a little bit, short-term rental comps, and I'm going to tell you where to find those. So we've got a leases transferring and we've got market rent. Now, if I was buying that property and I said, you know, I don't want to buy that property with any tenants, get them out of there, and I want this delivered vacant, and that's what the contracts, that's when we're going to use market rents. And again, folks, traditional lending, 75% of the lease or market rent. With DSCR, we use 100%, okay? We also only qualify on the qualifying payment, meaning that we usually on loan, ARM products and interest only, we have to figure out the worst case scenario. With a DSCR loan, these are what you call business purpose loans, okay? They're almost like a commercial type of loan, but without the commercial costs of the appraisal, et cetera, okay? This is the difference between us and the local bank, much cheaper, okay? So we're gonna use 100% of market rents, or we're gonna use 100% of that lease, whatever is determined by that appraiser, okay? We do have ways for the loan officers to actually say, hey, listen, I know the market rent came in at 5,000, but we have a lease signed at 7. And the client's already moved in, or the tenant's already moved in, and they have that there. We'll give a small exception hit. We'll usually do that deal if it makes sense, okay? But there is no DTI factored here at all, okay? So we've got the purchase part. Now let's talk about the refi. There are so many investors that own properties that are debt-free. It is next to impossible to get an investor-based home equity line without going through a ton of legwork. Do we do them? Yeah, we do. But they're not great and the rates are sky high, okay? So really important to know that if you have investors that have properties that they own free and clear, right? They can take cash out really simple with us, okay? Especially if it's low loan to value, the rates are going to be fantastic, okay? So important to know that you're not only seeking investors out there, but you're seeking investors to get information, right? Maybe they want, like we just had someone that wanted to buy a second home on Cape Cod. He owns 5 multis in Boston, all free and clear. Said, why don't you just do a cash out refi there? He's like, well, I don't have any income except for my rental income, and I write off the sun, the moon, and the stars with it. So that's all right. We just base it off the gross rental income. I don't need any of your personal income. No sweat. Quick 600,000 out. Realtor got the new deal on Cape Cod, right? So where there's a way we can do it, but just know, like if your clients are trying to get investor-based home equity lines, it's easier to go this route. It's easier for them to, qualify cash out that way as well. Okay. So anyways, we are, so we just went through what like normal rentals would be. Let's talk about short-term rentals, right? So if you have a short-term rental market, right? We use a website called AirDNA. We use Zillow. We use rentermeter.com, MLS, current leases, local leases, lease companies. Get the information. Get on VRBO, right? But if you use AirDNA, you can circle in on the address and find out what the average costs are and average rents that customers are getting based on a 12-month rental history or monthly rental history. So look at the last 60, 90 days, 120 days of what people are getting. This website is incredible. I could do a whole presentation just on AirDNA. And AirDNA is a software company that aggregates data from all these different short-term rental websites, okay? Let's face it, MLS for short-term rentals is not great. MLS for rentals is still not great. If you want a very conservative look at what a monthly rent would be on a, on like a 12-month lease basis, use Rentometer. But short-term rentals are huge, folks. People want to invest, right? If you ever get on this Bigger Pockets or you find the local meetup that's near you, I'm telling you, they're all around you. Investors are looking for realtors that know what the heck they're doing, right? So that's who we're looking for. We're looking for the first-time people. We're looking for the mom and pop people that own 50 properties. We're looking for people that want to invest in real estate. After today, you're going to be able to go out and put on Instagram, Facebook, and LinkedIn and just say, I just got trained by CrossCountry Mortgage on investor loans and all the options that are out there, right? Call me today if you're looking at an investment property in 2024, okay? After a 10-minute call with one of our loan officers here, we're going to be able to tell them what they can do or how they can save to get there. We do this with as little as 20% down, folks, right? Most other companies require 25% down or more. So again, we're using the rents divided by the property's principal, interest, taxes, and insurance, and if there's any association fees. Vacant properties, they're good, we're fine, right? And we could go down to at least 75% of what that payment is, okay? We've also got really great ways to qualify, like interest-only payments, right? Someone's bridging something out, like, for instance, someone needs to pull cash from an investment property, but they may pay off the mortgage in 12 to 24 months, do an interest-only payment, okay? So really important that you understand this here today, because again, investors don't know. A lot of people think they got to put more than 20% down to buy an investment property. A lot of people think they can't qualify, right? And I'd say one of our biggest successes here was this one. I had a borrower call me that got referred by a real estate agent in Boston. The client inherited $1 million, was a retired janitor for the Boston school system, okay? Made 75 grand a year pension, had a home of his own, kids in college, etc., had debt, didn't know what to do with the $1 million. The real estate agent called me, said, Pete, sending you over this person. We're looking to make an offer. I'm trying to figure out a way to finance like $200,000 or $300,000 with their $1 million down payment. And I said, why are we buying one property? And she said to me, she goes, I don't understand what you mean. She's got $1 million. Why aren't we buying multiple? This person's retired and was a janitor, like knows how to fix stuff up. Yeah. I said, well, let me talk to them. So we quickly looked at the property we were looking at. And it was that example I gave before. It's $9 grand in gross rents. The payment on the property, when we were all said and done, putting 20% down, was like $4,200, $5,200 with taxes and insurance. And I'm like, yeah, you easily qualify. Here's the rate. Here's this. They were like, oh my gosh. And I'm like, we only have to put 20% down plus closing costs. I'm like, yeah. These people ended up buying 4 properties. I turned the $1.3 million purchase into $4.7 million worth of transactions for that real estate agent. So think about it. Think about if you were able to get a cash out refi for someone, how many investment properties they can buy. So if you have a resource to find who owns properties free and clear, investment properties in your local area, I'd get a mailer going tomorrow. Talk to one of the loan officers here about how they can help collab on that. Okay, really simple things can create instant business because people are looking to invest. Rentals are at an all-time high across this country. There's less than a 4% vacancy rate in many large cities. So, unless we're building more houses and more people are looking to sell and get out of their super low interest rates, rentals are a huge part of the business that we're going to be part of for years to come. All right. One last thing about this, hard money, okay? I am sure that our loan officers here have hard money contacts for you. If not, we got to get some lined up for you guys. Hard money is basically, I'm going to buy an investment property and the property doesn't qualify. You want to sync up as a realtor with some of these people. And the simple reason is because they can send you deals, number one. Number two, we have a way to help people that are, instead of looking to buy and flip a property, maybe they want to buy and hold a property as a rental. Okay. So hard money lenders are always looking for options from us. That's so they can refinance people out of their 12% interest rates into stuff 3 to 4% lower. Okay. So hard money lenders are a great avenue for real estate agents and loan officers to get more business. Okay. So important to know. All right. So this is the Agent Hero program, is our full doc program. Okay. Again, 90%, we're focused on fallout, people that can't qualify the normal way. So what are those things? Oh, I don't have a credit score. I'm moving here from Europe, but I have a job at this pharmaceutical company in DC. Okay. I'm a government contractor. I've been overseas for the last 6 years, but I'm moving back, but I don't have a credit score right now. Okay. I am from a foreign country and I'm moving here, but have income and assets and are going to be, in the, Baltimore, Virginia, East Coast, side. I'm not sure where all the realtors are here on this call, but I think you're from that general vicinity. I'm from a foreign country and I don't have a way to buy, but I do have a job here. We can do those deals, folks. Okay. So no credit score, no problem. I'm going to tell you one of our quote unquote hell no's. The credit score is below 600. We're not going to look at it. Work with the loan officer. They'll work to get it up. But the one thing we want, this is not subprime mortgages where we're giving people, loans because they have a job in a heartbeat. We have to have a comfort that these clients will repay the mortgage. We have to have a comfort in the asset. Okay. So a recent credit event, I'm sure all of you have seen those deals. I know the loan officers have, where all of a sudden, right before closing, oh, there was a short sale that just popped up within the last year. My client did a cash for keys 6 years ago, but it finally just sold. So there was a foreclosure or a short sale. If it makes sense, we can do it. Okay. Bankruptcy, we can do it in shorter time frames with credit events than anyone else out there. Again, got to make sense. Debt to income ratio over the limit. Again, Jumbo's max DTI is 43. So if you go over that limit, there's really no exceptions. We can go to 55%. Okay. Depending on loan amount. The other thing, loan amounts. Okay. We just authorized an investor deal, full doc, $7.5 million. Okay. It was a $12 or $13 million purchase. Yeah, we'll do that deal. And then on the primary and second home, we've been known to go to 4, 5, $5.5 million, depending on the DTI, FICO, and what's happening. So large loan amounts we like. Huge acreage, homes that are unique, homes that aren't in areas that, are populated, rural areas. We'll do those. Non-warrantable condos, condotels, co-ops coming soon. Out-of-the-box income calculations. So we're going to talk about buy now, sell later at the end of this, so I'll cover that then. But out-of-the-box income calculations are really simple, meaning my client is getting divorced and one spouse has got a huge 401k that's going to pay that. I can now use asset qualifier. We're going to do that. My client was W-2 in 2022, but basically became 1099 or became self-employed, but it's been in the same line of work. We'll find a way to do that. My client was a doctor at a hospital. Now he's gone to self-employed. We'll take a look at that. So W-2 to 1099 or W-2 to self-employed, as long as it's the same line of work and we can get an idea of where the expenses are, we'll make a way to, make that happen. Asset utilization. My clients don't qualify for the other items, but they do have a mix of W-2 plus they have assets in the bank, say 200, 300, 400,000. We have a way to use passive income where we can, if the borrower has access to those funds, we won't make them set up a distribution like a lot of companies will. We'll actually just do a factor of 120 months. Okay. So we can get extra income there. But bottom line is, we want to help you. If you hear in the office a deal falling apart, if you see a deal falling apart, or people are procrastinating to get you answers, we are not those loan officers, and we're not that company. So if you see fallout or you need something to run by us, let us know. Non-warrantable condos are huge. Condotels are huge items that we do. Unique properties, appraisal problems, really big things, okay? But think about it. Any deal that got denied, or any client that didn't think they could get a deal done in the last 12 months, you should definitely be sending this loan officer group to see if we can make it happen, okay? Or a national program, which I think affects a lot of you in the DC, Virginia, Delaware area. I know it, basically any sort of urban area, or if you over here, foreign nationals that are looking to buy in second home areas, we can help that as well. But the definition of foreign national for us is someone that doesn't live here full-time and doesn't work here full-time, okay? Someone that lives abroad. So for me here in Boston, Massachusetts, we have Harvard, MIT, Boston College, BU. We have a ton of foreign nationals coming to school here, okay? So when they're coming to school here in Boston, a lot of these parents from China, from Europe, from, all parts of Asia, they don't want their kids living with other kids for some reason. So what do? They buy properties, or they invest in condos, but they don't live here. They don't work here, but they do have assets, or they're buying it as an investment property, okay? So, a lot of foreign nationals are coming into the DC area. I know that just simply for work, or simply because maybe they're foreign diplomats. If there's a way that we can do it, the key thing is this: they got to close here in the US or at a US consulate, okay? That's the first thing. The second thing is, with the foreign nationals, they have to have the ability to come into the US. We accept a ton of visa types, all right? But we don't need any US credit, okay? So we have a way to figure out the FICO here, and there's an adjustment for that in the pricing and rate. But look, we go up to 75%. I know portfolio banks will, hey, you put 50% down, we'll just not look at the other stuff, right? We don't look at anything overseas. I don't care what they have in Europe or China or wherever else, okay? We don't care what their credit score is. We want to see that either as a rental, the DSCR level is going to be 0.75 or higher, okay? But that asset will rent. Or I want to see I think we got like 300 or 400 foreign banks that we can translate, not only the language, but also the currency to make sure that it's going to work, okay? But we'll use an asset qualifier program now for foreign nationals. It's 150% of any mortgage debt that they have here in the US, okay? Again, this is a no ratio programs that we're doing it. Very, very, very simple that we can get you answers here on this, okay? So we're looking for non-US citizens, basically, okay? We do hybrids of these for foreign nationals that do have a job here and do work here, but might not have credit. So talk to our group here about that. And yeah, think about any client that you might have gone to that wants to spend more money that paid cash for their property. New York City, folks, right? We had a $4.5 million cash out refi for a Chinese national who bought a $10 million condo. He took that money. So after our, corporate event that we had a couple months ago in Nashville, our sales rally, I had a loan officer go back and tell his realtor about this. The realtor said, oh my gosh, I have a ton of foreign nationals that bought properties in New York City during COVID. The realtor went out, contacted this borrower, said, hey, listen, contact this loan officer. The loan officer said, I can't believe I just got this deal. So we did a $4.5 million cash out refi, and now we're getting 2 other deals because they're using those proceeds to buy 2 more condos. So again, use this information as you can to go out and hunt more people for yourselves, okay? But again, just like a portfolio bank, look at these exceptions that we issue, okay? We just went through the programs. Look at the exceptions that we make. These are all exceptions to guideline. It's huge. So we've gone through that. One thing I wanted to let you know is that we have a cross-country affinity program. So in 2024, if you're looking to boost your client base, we have an affinity program where basically think about it as like a grassroots business-to-business program. Now, if you've got a good friend at Nike that runs HR, we have a corporate program that we can do as well on a much higher level and make you look incredible for 250 employees or more. But if you've got someone that's got 25 employees or more, you know, this is great conversation piece over the holidays or at holiday parties, or again, in your BNI, right? We just made a recommendation to a couple local businesses with my old branch, and they signed on. But basically what we're looking to do is to make a business-to-business affinity relationship where you as a realtor give a discount, we as a lender give a discount, maybe we drag in the title person, the attorney, maybe an insurance person. You give, you know, 4 educational seminars a year, once a quarter. You do a one-on-one day. We'll do that, get people pre-approved. But it's a really cool program. Think about it like a real estate and mortgage, you know, discount program for companies. So companies that want to add like a really cool, you know, HR benefit. HR benefits are everything to an employee these days. It's probably one of the most sought out things before someone gets hired. So if you know a company, talk to the loan officer on this call. Let's get something dialed in. And then lastly, buy now, sell later. So kind of like Gina was talking about before, right? We have this killer program where we're going to start to see it coming into the winter months, right? Because let's face it, people don't always want to list their properties when there's snow on the ground or before what they quote unquote deem as the hottest time of the year from March to June to sell a property. So, but oh my gosh, Gina, I found that property on that special road in town and I really want to make an offer and we have the money to put down on the property. And I have 20% equity in my current house, but I can't qualify to carry my current mortgage payment and the new mortgage payment.
I'm doing one right now, closing on Monday.
Yeah.
Same exact situation.
Yeah. So this program is killer for you as a real estate agent. This is not a bridge, but yet we can use the CrossCountry bridge loan if they've got enough equity to help finance for have them to grab that equity out of their current house to put down on the new one. These clients have to have money though, folks. Okay. They have to have equity. We do a drive-by appraisal to affirm that the current home that they're living in, that they quote unquote will promise to sell within 90 days. Okay, that's all we need is a letter. Promise to sell, we're going to sell within 90 days. If you want to list it, great. If it's already been listed and not selling, we've got a program for that too. But here's the deal. They can go and make an offer on that home and we can close, and I will not count the payment on the departing residents. Okay? We obviously want them to sell that other house. We want you to make that commission, but we don't want you to discount not getting the commission on the new house. If there's an opportunity, let's go for it. Okay. Not everybody's got the money to do this, right? The loan officer team here, what they're going to do is they're going to figure out a way to present this. That's so we can try to get this done. But this is guideline. Like there's no exceptions that we need on this. But we're taking the stress out of in a really hot market, home sale contingencies, suitable housing clause, having to sell before they buy. And we're just taking out the stress. Okay. But basically what I'm trying to say to you is that we want to make sure that we're giving you every single option. That buy now, sell later is huge. Because listen, you might be telling people, I want you to do some work to this house, but they really want to make an offer on that new one, right? Or the kids, I mean, let's think about another one. The kids, I don't want to pull them out of the school district yet. If I close on this house in March, you know, we can get the work done we want to the new house and then move in, you know, within 60 days. So we're only going to be like 30 days left. But anyways, folks, I hope you enjoyed everything today. The most important thing is The loan officers here, we have this incredible system we called Total Expert. Get them your info, become a partner in there. This is for you. This isn't for me. I'm just giving you good advice, because we can give you flyers, emails, social graphics, brochures. We can do dual branded videos, dual branded presentations. Like if you have one of these investor groups, one of these loan officers would love to come and do this, right? But we have so much that we can offer you, because the bottom line is this: people don't know what they don't know. And as soon as you let them know, like, hey, I learned about self-employed mortgages today. If you're self-employed and don't think you can buy a home, let's get a property for you in 2024. Okay. I mean, you can put out whatever you want. Tag these loan officers in your social media on it. It's huge. Okay. I marketed these programs with realtors for 1 month during the slowest part of our real estate transaction cycle up here in New England. And it was mid-July to mid-August, and we did a lot of business. Okay. If you market it, they'll come. If you're consistent marketing it, consistent sending stuff out, do an investor seminar, right? You could do stuff on Zoom like this during lunch, and people love it. Okay. So thank you so much. And are there questions that we
There
can
was one
answer?
question, Pete. It was asking how condo associations go into, I think this was with the DSCR,
Okay.
how their dues go factor in.
So again, it's the principal, interest, taxes, insurance, and association dues. So it's the full it's the full payment. And by the way, folks, like if someone wanted us, like you're going to see at some of these investor meetups that like it could be people like any of us on this call that are like, all right, I'm in my mid to late 40s. My kids are going to go to college. Like I've been thinking about it with my wife that it's like, we did a house in Vermont with the same type of scenario 10 years ago, where we short-term rented spring, summer, fall, because we live near the ocean. And all winter, I got a free ski house because my rental pays for it. So like, if you can find a way, like we've had a huge group of people do these deals in South Carolina, Florida, California, Nantucket, Martha's Vineyard, Newport, Rhode Island, Vermont, New Hampshire, Maine, like anywhere where you might see yourself or people might see themselves. You can talk to a financial planner, get an investment strategy, where they can save the money or they could put the money towards this. There's even people out there selling, there's like an insurance play on this too, where people can do, whole life insurance policies to help finance and get the down payment for these tax-free. So there's so many different avenues, and it's just, again, letting people know that you might have that avenue and speaking up about it is a huge thing, because when that opportunity knocks and like, hey, I can see myself in a warm climate, we lend in all 50 states, right? Soon to be Puerto Rico too. We do have offices there, but we can't do these products there yet. So
Thank you, Pete. Yeah, and I just want to add, it is interesting because this is that one category that has been growing, and personally, we just had a team meeting this morning, and half of the loans that we're working on right now are this non-QM or could be. So the concept is that we will always go down the path of the loan that fits in the box, because that's the best interest rate, the easiest, etc. But it gives you the confidence and your client the confidence that you can continue to move forward. So again, I have one closing on Monday. They thought they would sell that condo, that they didn't. The new house appraised 100,000 over ask. They did not want to back out. We kept moving forward and we moved to plan B, and everyone was aware, everyone's comfortable, and it gives you that confidence, the perception to get the business across the finish line and to help these buyers. So I think I'm just thrilled, because as a loan officer, it gives me that backup. And there's nothing worse than not having a backup plan. And when you have 4 different backup plans with different solutions, it allows us to be very confident with the buyers.
Yeah, and
100%.
Pete, thank you so much. And I have to say, I'm sure you guys, your heads have to be like thinking, okay, what about this? What about this? You know, like I've gotten messages if I want to do the flyers, I want to talk about this. So, you know, all Gina and Jordan and I are, you know, would love to chat with you and see what we can do to help you guys with marketing, with getting this message out. You know, I was making notes myself of different videos I'm going to do to put on social media. You know, so there's so many things you guys can do with this, and my head was spinning with all of that. So if you have any questions, reach out to us. You know, we want to help you. And Pete, thank you so much. That taught me a lot. I just came in April and I'm like, okay, this is awesome.
Yeah,
You're
well,
the best, Pete.
yeah, and again, we want to help create business for everybody here. So,
Yep.
you know, it's if you can go a different route and think about adding, you know, 4, 8, 12, 20 new ways that you can bring in more buyers in 2024, add this stuff to your business plan, 100%.
100%. Yeah.
All right.
All right. Awesome. Thanks all. Have a great rest of the day.
Thanks so much.
Thanks, everybody. Later.
All right. Bye.
Bye.